Good afternoon, everyone, or good day. I am Bagadon at Stock Market Caddy, and a little different view, right? We have a different view, and I'm sorry about the lead-in. We talked about live trading futures, but we will do that another day. We'll get back to doing what we do day in and day out, and it's been a pretty good morning on the futures side of things. But we wanted to give you a view of something that we call SMC Trade Generator Pebble Beach Triggers. And we're going to go through this a little bit here. We're going to give folks a chance to patch in. And now I'm not, please know that when we're doing this, we're not suggesting that anybody take these trades, right? We're creating a little awareness of how we go about trading. These particular trades are going to take days, maybe even weeks to unfold. Okay, so when we're trading futures intraday, the feedback is, instantaneously. You can see it, feel it, and but here they're going to take a little bit longer. But we want to get, just by creating a little awareness, give you some insights as to how we go about things. Right now, it is June 5th at about noon, and we'll stay with you for about an hour, 45 minutes to an hour. If you have any questions, don't hesitate to put them into the chat function. So I'll be back in a moment, and we'll give folks a chance to kind of patch in and play along with us. Again, hi everyone. We're showing you a little something different. And let me just take a moment to introduce myself. I'm Bagadon. This is StockMarketCaddy.com. Today is June 5th at about noon. You're looking at a tool that we have been using for a long time, long before Swing Machine. And it's called SMC Trade Generator Pebble Beach Triggers. And it is a stock and option trading tool. It is looking to giving us, or it is scanning real time. Now, I'm not suggesting, if anyone's following out there in the Twitter sphere or on YouTube, searching for trades, I wouldn't suggest that you take any of these trades. I wouldn't suggest that you take anybody's trades off of the internet. It just, whether they work or they don't work, it isn't going to help you long term. It just isn't, in our view. The reason why we're doing this is to showcase who we are, what we're about, how we approach our trading, which is very mechanical, very robotic. We're looking to build whether we're trading futures intraday or stocks or options, we're trying to do something that is repeatable. We're trying to use technology to help us get that done. In golf, they talk about a repeating golf swing. So just to give you a little orientation here, this is the name of the tool. It is a radar screen. It's operating on TradeStation's the TradeStation platform. We have no affiliation with TradeStation other than being just a very happy customer. And we use them for a whole host of reasons. They're just very, very good at what they do. And we think their platform is superb. And with their easy language, we could not be doing from a trading standpoint what we're doing without them. Not to knock any of the other platforms, they're all very fine, but a lot of them to us seem like toys. And the other piece is TradeStation, this radar screen is proprietary to them. And what you're able to do is place hundreds of stocks or markets, and it's basically a real-time scanner. It's updating itself tick for tick. Now you can set it on a daily interval, you can set it on an hourly, you can set it on transactions, on tick amounts. You want 500 or 1,000 ticks, which could add some relevance depending upon what it is you're trying to do. And what we've done is to write programs, which is what this is. It's a program. So everything that's up here in blue from, maybe I get a little marker here. So everything from this side, everything going this way is part of the same program. And it's what we've written. It's our proprietary code. And we share this code with our monthly members. They get a chance to see the signals, a daily signal, and these are daily, right? So this isn't going to be, these trades are not going to be, if I didn't say this earlier, they're not going to be instantaneous. We're not trading the futures, on a minute by minute. So it's going to take a little while to play out. Hopefully they can play out a little bit while we're here. We'll place a couple of trades and get them on. We'll show you, the process. But we show this tool every night to our monthly members, and our annual members have this very tool on their desktop. Now the annual members need and have to be a TradeStation user because our programs are only compatible with TradeStation. So we have here, we'll just kind of work from left to right. We have the symbol, and we're scanning 500 S&P stocks, the biggest, deepest markets in the world. And we're doing this on a daily basis, right? So we're diversified in not so much in what we invest in, but we're diversified in how we approach the markets. And so this is giving us the last price, which is real time. Now you're on delay if it seems a little bit off to you, if you're watching from wherever. YouTube delays this. By the way, the YouTube image isn't the best. I would put it into the highest definition you can get. Our annual members, not monthly, but annual members, they also get to patch in each and every day into a live Zoom link, and they can see what we're looking at or what we're up to. And not that they're taking trades from us, they aren't. Hopefully they're doing their own thing, but they know where to reach us if there's something they need or want. This is the net change, and then this is the trigger. This is the trigger itself, and it's telling us whether we want to be a buyer or a seller. And this has very sophisticated lines of code to it that is mapping out a chart. So it's interpreting. So let's click on it. We'll click on the CRM. So on CRM, it triggered right here. See this little red dot? That triggered this Pebble Beach sell. Now, it triggered, the price was 210.43, 210.43. That was the optimum entry. Now, I wanted to have a trade on so that you could see it. So we put this, and we did this with options, and we put 5 on, which was, the cost was about $2,300. We had a run up of 250, and we've had a run down of where we are now. We're having a little bit of a drawdown, but it's telling us that we wanted to be a seller, and it looked good to my eye. We can talk about that, but it is, we can't get into the details of the code, but it does interpret where we are on the field, and it also interprets the most highly probable candle formations. And that's what it's doing. And as these things populate, it will come up. It will tell us whether we want to be a buyer or a seller. We'll put on another trade here in a moment. I'll show you a buy. So the entry price was 210. We came in, we got it a little bit later because we did it about an hour or so ago. The machine is actually up. If you had done it with a shares, not with the options, and options are leverage, right? So you can do even better than what the machine is doing. But had a person done this with shares, actually the person is calculating a $10,000 in shares. If they had shorted it, that's where they'd be basically flat. It does give you the stop level at 216.14. So if this thing was to reverse and get back up to 216, I wouldn't be a happy camper, but at least it gives me an exit. The signal came in today, and it shows me where I am in the field on a daily basis, and I'm kind of right in the middle. So that's where we are, and this is the trade itself. Again, we had a run up of 250, and we're suffering a little bit of a draw. This isn't futures trading, though. This isn't it's take it off minutes later. Now I didn't have to do as many as 5. I still think it looks very, very good. So we're going to leave this in place, and hopefully maybe later in the week, if we come back, we might do this periodically during the week, and we'll come back and try not to take them off or deal with them until we actually have a live session. Now this is also their sorting. So let me just show you, which is really very cool. No, I'm going to go, let's see here. I'm going to go to settings, go to page. And what we're doing is we're sorting. So it's sorting the signals. So the buys are coming up first and then the sells. Then it's also sorting the trade purse. And I have it sorting from top to down. I might want to go the other way. So let me change the sort, and I'll explain why. So I'm going to change the direction. And then let's see, I'm sorry, the date was first. The date was first. It's sorting on the date. Then the trade purse, which I've changed the direction. You'll see it change, and then the triggers themselves. So what's going to happen is when I hit OK, you're going to see that the smallest amount of money is going to be up at the top, and then the biggest amount of money will be at the bottom for today's signals. And watch, there it is. So the first signal, Texas Instruments generated a sell at this price. This is the amount of money that it is up. The stop, today's date. And here are the others. And as they populate, they will populate. Now, the CRM has gone against us, and the signal has, at this point, has gone away from here. But we're going to stay with that trade. I think it'll populate back in. And again, we're just, you need to have a more patient view, when you're trading stocks and options. Okay, so now we can, so this gives you the entry price. This is calculating these numbers here are calculating the trade purse based on if you had used $10,000. And you can change that. Let me just show you. We'll come here to edit. And here it's not futures, so that's false. It's stocks, which is true. And we're put in $10,000. I could put in 100 shares, but if we put in $10,000, then we get a balanced view and it'll be the same. Okay, so if there's any question on that, let us know. And then so entry, trade purse, the stop level, it knows if it's short or long, so it's going to give you a stop on the opposite side. 216 would be problematic for our CRM. The entry date, which is only going to be today, and then this tells us where we are in the field in terms of panic and euphoria. So we'll take a look. Now, we don't have a whole lot populating. And now, one of the beautiful things about the Pebble Beach or any of these mechanical tools, if they get them wrong, they will kick them out. Okay. So it's up to you. I'm going to stay with this particular trade because I feel pretty good with it. I don't like the fact that I'm having a draw, but I will probably need to revisit that, at least toward the end of the day. But that's one of the neat things about using mechanical tools is that, they're going to stay in gear and hopefully keep your emotions in check, and they're not trying to be right. They don't have an ego. They just execute. By the way, I do want to go look here. We entered into the CME. The CME had a challenge this week for precious metals, and so we're monitoring that. And there are 2,200 traders, and we are currently ranked 123. So not too bad. We're just trying to get ourselves in position so that we'll be in a better position toward Wednesday or Thursday. And then on Thursday, if we're hopefully in the top 10, then we'll start really trading aggressively. It's a little bit cumbersome. We were sharing with our members because we have to go through the exchange or the trading platform at the CME. Now we're at 121 because so we can follow it mechanically and execute trades, but we can't do it robotically. Makes sense? All right, so let's just take a look. I'm going to clear some of this writing, and I'm happy to answer any questions that you have. Now, I could have, this is where it depends upon one's, trading skill and approach, how we could have done this. The trade that I put on, I put 5 puts on because I felt pretty good with it. I could have structured that differently, right? We could have had done a call credit spread would have been maybe a better route. But let's look at some of these others. Let's clear some of this writing. And oops. Oh, I didn't mean to clear it all. Well, there we go. All right. And let's see here. There we go. I just meant to clear that. Okay. So let's take a look at what it's telling us. So it's giving us a sell signal on Texas Instruments, right? And this is hopefully going to keep us from, running around. There's our CRM. Our CRM is back, is coming back into play. It wants to sell CRM, but it wants to do it at 210, which is a better entry than I got, right? So this is what's neat. So it'll populate the newest stuff, and that's why I did the purse calculating from low to high, because the newest stuff will populate up at the top. We'll see it, and we'll be able to pounce it. See, here's the CRM. So CRM is saying, I really want to short this thing at 210.41. That's where it wants to sell it. Okay. I did it in the hole a little bit and I'm paying for that, but that's where it wants to go. But I still think it looks pretty good. Now, I don't know if they got earnings. We'll have to double check. If you've got, once you start trading stocks and options, you do want to take into account some earnings. So let's take a look at some of the others. Here's Texas Instruments on a sell. Yeah, the entry price was 172.90. We're not too far away. That does look pretty ugly to me. And but let's look at a buy. All right. All right. Well, this is Charter Communications. And the other part is too, what you have to be aware of if you're trading options is, how liquid are these things? You do need, when we're trading futures, we can, we know we got liquidity, but just how much on Charter, how much liquidity do we have in the options market? Would have to go take a peek. But so Charter is generating a buy, probably be pretty slow. We're also getting a buy on kind of interesting down here on ConocoPhillips. It's rejected this price here. It's pulled back a little bit, but it still looks pretty good to my eye. Let's keep looking here. This is West Farmers. That looks really good. Yeah. Now, see, this is something that I would not even be aware of, but that looks really good to my eye. West Pharmaceutical. Now, how liquid are these options? I don't know. This is Bank of America. That also looks pretty good too. Now they're going to have really, they're going to be very liquid. This is Fastenal. These are buys. That looks pretty good. But boy, it is pretty volatile and it is up at the upper end of the range. So I might pass on that. But what is this? This is Northern Trust. So that's a bank. Yeah, that could be a bottom feed, huh? So I kind of like that, right? Of all these, and here's CRM keeps trying to sell it at 210. It wants to sell it right here at 210.43. So if somebody else gets it, you'll have a better price than me, and she drops back down to where we were. You'll make, a nice buck. I'm not suggesting anybody do that, right? All right. So if we have a buy signal though on something, let me look at that West. Yeah, I kind of like that West Pharmaceutical. So what might we want to do? Well, if I buy 100 shares of it, that's going to be almost $35,000. Huh? That's quite a bit of capital. If I buy a call, that's, that would be a long. But the probability of profit is in buying a call or a put, the probability of profit is about 33%. So, what I could do is I could buy a call and sell a call higher, do a call what they call a call debit spread, right? We could do something like that. We could buy a call at at 350 and turn around and sell a call at at 360, something like that. Or better yet, I could sell a put credit spread. And the probability of these spreads, by the way, if I was to sell a put credit spread, the probability of profit here would be about 66% probability of profit, not a guarantee. So I think that's what I would prefer to do. What I would want to do is on something like West, get on the right stock here. Maybe I sell a put at 345 and buy a put at 340 over 30. And this is the thing, it'd be over 35 or 40 days. And and let time accrue to me, right? That could be a neat way to go. Or we could just kind of sit tight and see if we get something else populate here. And maybe we'll just sit tight. Make sense? But what we're not doing is we're not listening to CNBC. We're not scanning the internet. I'm not just putting in a bunch of watch lists. We're using tools, and by the way, you can plug in anything you want here. So for instance, like if you come here to data, add symbol list. And so you could put in the NASDAQ 100, you could put in your own custom list and have them populating. You could have them all pre-screened and then just sit back and wait on them. But in the interest of trying to show and demonstrate here, I'm going to come in and it's probably not the best, but I'm going to buy a call option on Charter. Okay, I don't want to do a spread here because, we're doing it here today with you, and we want to see if we can, generate something right here today. And so I won't go out 35 or 40 days. I'm going to buy a call for Friday. Okay, so it's very short dated. So it's really probably not best practices, but let's do it. Now, I'm not suggesting you do this. I'm not. So we're going to see if we can get in here. See how liquid these things are, which I got the feeling they're probably not too liquid. Here they are. All right, so we're trading at 333. Wow. No, they're not liquid. No, they're not liquid at all. So we're not going to trade them. So you would want to have it a set pre-screened if you're a big option trader, and get the most liquid options in here. So we'll wait on something and see if we get something a little better. How about this West? Let's take a look and see how liquid they are. Or they're just not. What I mean by liquidity is there a lot of is the difference between the bid and the ask. Can we get out of these things if we needed to? I get the feeling these things like trade by appointment too. So there's no volume. Nobody's trading them. Now this this would be Texas Instruments going to have a lot more. So let's go and see Texas Instruments. They should. Yeah, they get a little bit. Yeah, they do. So they're a little more liquid. So Texas Instruments is a sell at 172. We're trading at 171. So I tell you what, I'll go in here, and they got a strike of 172.50, and we're going to get some puts. And let's look here and make sure we got the right date for June. I don't know if we got earnings coming up, but so we're going to get them for the 9th, right? So this is not really the best practice because they're very, very short dated. And if we get, okay, so we're going to get 2 of them, and bear with me. Okay, it's only going to cost us, $428. And let's see if we can get. See if we can get our price. So bear with me. Okay, we put the order in, and we put in a limit order. and we'll see if it gets filled. And we're trying to buy 2 puts at 172.50 that expire for Friday. We'll see if they get filled. If you have any questions as to who we are, what we're about, and anything for that matter, don't hesitate. And we're going to just let you watch. I'm not going to bend your ear. We're already 30 minutes in, but if I see anything new, they're going to come up here. If we see any, anything new that's juicy, we'll pounce on it. Otherwise, we're just going to kind of sit back and relax. What can be really, really nice is when you have a market that is extremely oversold or extremely overbought, which I think this market is extended to the upside. I don't like using the word overbought. We can just sit back and wait for the sell signals to come in, and they will come in. They will come in. There's not a whole lot right now. And maybe you have your list of stuff that you are particularly fond over. Okay, so if you have any questions, let us know. And we're still we're ranked at 130. So on our portfolio at the CME, they gave us $100,000, and we're up 10,100. We're up 10%. Okay, so there was a new one, and you can see she populated and then backed off of it. But that's when you get an early look. And it was something called DGX. So let's type it in here. DGX. Let's get a look on it. Yeah, I'm not that crazy about it one way or the other. I wouldn't be shorting it necessarily. But what is that? Oh, it's Quest. Huh, Quest Diagnostics. Okay, so we'll wait for something else to come our way. There it is there. It's actually a buy. So that, I would be okay with that. Yeah, it doesn't look like a short to me. So, so we're getting the hint of a buy signal on DGX, Quest Diagnostics at 134.80. So how do you want to do that? You could, if you buy 100 shares, it's 13,480. You could buy the shares outright. A person could do this. We're not suggesting anybody do it, but a person could. You could buy the shares and turn around and go 1 or 2 strikes up, 136, 138, something like that, and sell a covered call against it for 45 days, putting time on your side. You could certainly do that. Another way, you could buy a call. You could buy a call and at 135 and go upstream and sell a call, a higher call, to offset your cost and try to play for the middle. That is called a call debit spread. Or a better way for me that Susan loves to do is to put on there's the buy again. So again, it wants to buy it here. Is a put credit spread. So you could go down and maybe this is an idea that you sell a 134 put out about 40 to 45 days, and then take a portion of that premium and buy a put a little bit lower should the bottom fall out, and define your risk. We're big into defining our risk. Now we still have an order in for the Texas Instruments, and it's just on the option market, and it isn't getting filled. So we'll just wait on it. Charter Communications is hitting up. There's just not enough. Now Bank of America is going to have plenty of options. So maybe, let's take another look at Bank of America. So I'd be okay with same thing with Bank of America. You could buy it here. 100 shares is $2,800. You could buy it. You could buy it and sell a call. You could buy a call at 28 and sell a call at 29 or 30, create a call debit spread. Or better yet, you could sell the put at 28 and buy a put a little bit lower with that, and just let the time erode and put time on your side. So we'll go ahead though. Let's go ahead and see if we can get Bank of America. We're just going to get a call for now. This isn't best practices, but let's see if we can make a couple of shekels here. So we're going to get a call that expires like on Friday. Again, not best practices, right? Because the time is going to erode quickly. But let's see if we can get in and get out of this thing. Let's see how fast. So and it's highly liquid, as you would expect. So let's look here. If we wanted to, she's trading at 28.62. So at 28.50 for Friday. If I get this right, we'll double check this. Not suggesting anybody do this. They're selling for 62 cents. So if we were to buy 5 of these things, let's see. If we buy 8 of these things, that'd be $500. That'd be our maximum. And let's just go ahead and get it in. All right, they're pretty liquid. And let me just buy 8. Boom, there they are. Okay. So there are the 8 call options on Bank of America. Can you see it there? I got that stuff here from Zoom. So we'd want to try to flip out of that. But the CRM is not going our way, but again, we have quite a bit of time on that one. Let me go look. The CRM trade, that let's just take a look. That doesn't expire until June 16th. So that's 11 days. So it's not even that much, but that's worked against us. And it's probably also best practices to go in and set some stop losses and or some profit targets on those options almost as soon as you get them. If you have any questions on who we are, we're not a broker, not a financial advisor, right? We're not making specific recommendations to buy or sell anything. And we've been here a long time, not for, for 6 months, 6 years. We've been here, been doing this a long time. We approach our trading mechanically, robotically. We like to trade futures intraday. Why? Because they're very liquid. We can get in and get out. That's most fun, which is what we, most of our videos and most of our live sessions are on that, because, this can be like watching paint dry. Not the most exciting live thing, but it showcases you. And honestly, trading your stocks and options should be really pretty boring. Your futures trading should be pretty boring too. But we wanted to give you a glimpse because, we're asked all the time, do you guys just trade, futures? And no, we do trade stocks and we do trade options. And this is one of the tools that we go about doing it. And the Texas Instruments does have a trade in there if it can get filled. It's moving away from us here. So. And the CRM trade, it backed off. It was there. It probably will come back. It wants to sell CRM at 210 and some change. We'll see if it populates again. Now, I don't know. That's Salesforce.com. I don't know where they are with earnings, but technically, the trade generator we're looking at here, the trade generator from Pebble Beach, is saying that there's a high probability that that stock is coming in. So, and the stop level is 216. So what's nice about this, it'll keep you engaged, gives you the entry price, and it also gives you a stop level, and it tells you where you are in the field. And then you can apply your expertise, what type of options you like to put on. Your probability of profit is going to go up with spreads, especially credit spreads. And this is, it is working, right? It is sorting if there are any opportunities. So it's scanning the 500 stocks. So what we're not doing is, I'm not changing from chart to chart to chart. Like, oh, let's look at that stock. Oh, let's look at that stock. Oh, let's look at that stock. Oh, where are the Bollinger Bands? Oh, where are the candles? Oh, I see this. I see that. I see this. Trading what we see, right? You go blind, drive you to drink. We can program, whatever it is, and then just let it populate. And then as those conditions come true, then they will bring the cream to the top, and then we can pick and choose whether or not we want to act on it. And this fast snow. Yeah, I just don't like the looks, she's big, unwieldy. I wouldn't buy a call up here on it. I don't like the looks of that. I do like the looks of that though. Bank of America. It almost looks, too, we got a low here, higher low. Could this be head, left shoulder, and so now we bought calls on it for Friday, which is an aggressive trade, but you could, you could buy it, sell covered calls against it, and that sort of thing. And that'd be a beautiful way to go. You know, you go in and person buys 1,000 shares, it's 28 grand, 29 grand, and then immediately go up and sell a 30 covered call for 45 days. If we get there, you get all the profit, plus you keep the premium. If it falls back below 28 and down in here, you've got some insurance from the call. That could be, a beautiful way to go. That's where, you want to be in your trading. You can have all the best tools in the world, but if you're not, familiar with what the options that you can do and structuring it, then you still could struggle. We'll stay in here past 1 o'clock. We'll go to about 1:15, 1:20 or so, see if we can get after the lunch hour, see if we can get some more opportunities for you. But right now, this is talking, it's got a short on Texas Instruments at 172.90. It's got a buy on ConocoPhillips. And I think that looks interesting. It's pulled back a little bit today, but I do think that looks interesting. Charter Communications got a long at 334. I think that looks interesting. Okay, so here's one that just came up. This is new, right? And see how the purse is just at 252. So we want to be able to pounce on them. It's Hologics. Now I really like this company. That looks good to me. That looks really, really good to me. Now I don't know if they got earnings or not. Then please don't. But this is how we find them. This is how you get NVIDIA, when she's at 160 or 175. So here's Hologics. She's trading at 79.27. She's just generating a Pebble Beach buy now. So what could we do? Well, we could, if we bought 100 shares, we got to have $7,927 in our account, right? Which, is be fine. But Don, what if she falls? Okay, well, if you bought it here, not suggesting anybody do this, we're just talking as an example. If we bought the shares here, we could turn around and we could go upstream to like 80 or 80, 81 and sell a covered call for 45 days against it. If she runs up to 81 and keeps on going, well, you're only going to capture the profit from where we are to 81, and you get to keep the premium. But if she falls backwards and you've sold the covered call, you get to buy the call back on the cheap, and it acts as insurance, and then you get to reassess what you want to do. Or we could just buy a call, which now the probability of profit is about 33%. That's what everyone does. Buy, put, buy, call. Those aren't necessarily the best things to do. We could buy a call at 79, and we could sell a call at 81, do a call debit spread. Or we could, better yet, we could sell a put at 79 and go downstream at 78, 77 and a half, something like that, and sell a put with that premium that we collected, and then put time on our side and let the thing bounce up, decay, and we just keep the bread. That'd be a beautiful way to go. But that's how we find them. Right here. More opportunity every single day than you or I have money for, quite frankly. I mean, they just keep coming. And I'd be inclined to So let's go and see. We'll go ahead and we'll play that aggressive. I'm going to go to Hologix and because I want to put a trade on. Now, this isn't best practices. Symbol is HOLX. Let's see if they got any volume. Oh, boy, oh boy. They don't they don't trade a whole lot of options, do they? Especially short dated stuff. Yeah, we just don't have the liquidity here to do anything short dated, right? And so I just wanted to demonstrate. So that's always the issue with options, trying to do a live session. They do have some options, but not a lot. So we just don't have the liquidity. And as an active trader, and this really does demonstrate too, again, why we love futures so much, because they're so liquid, right? They're so liquid. You can get in and get out. If you have any questions, let us know. Okay, so we went ahead and let's just buy Hologix. We'll just buy it, right? Well, let's not flirt with the options. We'll just buy it here at at what we got and at 79.20, right? We just buy 100 shares. It did disappear. It'll probably most likely come back up. So a little bit early in here. And if we wanted to at the end of the day, if we run up and she's up 70, 80, 100 bucks, something like that, then we could turn around and sell a call against it, right? So it doesn't have to be, right? We don't have to use options, right? I know everyone's probably focused on that CRM, and that's fine. We got it's well within our parameters. When it comes to options, we don't want to lose 50% of our premium or 50% of our time. And so we're not with the whole option on that CRM. There's 5 of them. I think it was about $2,200. So we're well within our thing, and it's early still. So we still got plenty of time, plenty of juice left to it. But that is our rule of thumb. And if we get up more than 100% in our options, and we have more than one, hopefully it would have more than 1, 2, 3. We want to close half, minimum close half. If we only had one and we're up double, we're going to take the whole thing, the whole enchilada. But we took Hologix because it populated here for a moment. It fell back, came right to the top. And these things are being sorted. So it's sorting based on today. So we only want interested in today. It's then sorting on the trade purse. And in the trade purse is based on a $10,000 move. So if we had put $10,000 into Texas Instruments short, it would be up 60 bucks, 95 bucks, 110, 130, 233, 243. So we could have done that, right? You could be doing that. Of course, CRM, Salesforce.com also populated and it fell back. But but this is a highly leveraged position, right? So that's why the number, it's as rich as it is. It was leveraged, and we got 5 of them, right? I got a little greedy. All right, but we'll be fine. We'll keep you posted on them. If you have any questions on what it is you're seeing, don't hesitate. We keep checking our standing in the CME. So out of 2,200 traders, we are currently ranked 138, right? So we're fine. Looking pretty good there. And we're up about 10,000 and the number one person's up 24,000. So we got plenty of trading left to try to catch them. You can put in any stocks that you would want to put in. Maybe you want to have them pre-screened. Maybe you want stocks that are the most beat up and you put them in and just wait on them. If you have any questions for us, just let us know. We'll come in here and let's buy 100 shares of Conoco too. Let's do that. Let me tee this up. So it's ConocoPhillips, COP. We'll come in and buy 100 shares. Probably want to sell a call against it, but we'll come in and buy it. Okay, so we're buying it right here. And the strike price ideally is 199. We're a little bit above that. And the stop level is 99.23. We should not go below 99.23. And we just try to stay with it. So we'll keep those positions on. we'll try, I'd like to see them all be profitable in the span of a 1 hour live session. That's not likely nor probable in a, especially with stocks and with options. Now with futures, we can get in and do that sort of thing, which is obviously a lot more fun. But we wanted to be able to showcase today other tools that are available to you at Stock Market Caddy. Whether you're a monthly member, you get to see these triggers at the end of the day. There'll be a host of them, and they're highly probable daily setups, and certainly very actionable, even the next day. So you can keep an eye on some of these, and we'll see if we can get a few more to populate, so you at least get something. But and then if you want to have this, something like this on your desktop, we have now, we say over 65, but there's probably over 70 proprietary tools, including radars, but not limited to radars, strategies and indicators that are available to our annual members. So this is one of the, we haven't showcased this a lot because it's fun, and it's just that stocks can be terribly boring. Boring is good, though. Boring is good. Do we have anything new here? We really don't. We still got the same 5 or 6 here, and that CRM came sucking back up here. Let's go take a look at CRM. Let's see what happened here. You see it on a chart, and it just came back. Yeah, it's got a little hammer candle, but don't particularly care for that. So we'll keep an eye on that. I still think it's going to break down. But not, probably with the NASDAQ doing what it's doing. The NASDAQ is really, really ripe to come in, but and if it does, we'll be in fine shape. So we'll leave these on, and we'll try to update you. And how is gold doing right now? How is our gold? We're in the CME challenge. We're long gold. Yeah, beautiful. Okay, we're in good shape there. Yeah. So what we're doing on the CME will run these contests. You have to use their exchange. You have to play by their rules. So it's all legit. They're doing it on precious metals this week, and started last night at 6, and we'll run through, I think, Friday until 1 o'clock, I think it is. And there are 2,200 or 2,300 traders. You can go in and look, and you can see where we're positioned even real time. And we are currently, I'll tell you exactly, we're keeping a casual eye on it. Yeah, out of 2,200, we're 142. We're up about 9 grand on a portfolio of 100,000. That's what they gave us. Now we have to trade it very aggressively, and you have to do some things you wouldn't ordinarily do, because we would like to win it. You got to be in the top 3. If you're number 1, I think you get an ounce of gold, and top 2, 3. So we're trying to do that. What we want to be able to do, I can't trade it real aggressively and robotically, because I have to go through their platform. So it gets a little cumbersome, but I will, if we can get ourselves in. What I'd like to do is get ourselves in, in and around the top 10 going into Friday. And if that's the case, or late Thursday, then I'll start actively trading it, and I'll even be prepared to stay up overnight to try to win the thing. Now we've done it before. The last time there were 1,600 and we finished 7. We came close. And the time before that, there were 1,400 and we came in 20. We were number 10 going in, but we didn't quite get it done. They're very, very good. There's no doubt about it. And the good thing is we don't have to compete with each other or with others in the market. You only have to be concerned with what you're doing. I don't like what CRM is doing. I don't like that, right? So we'll keep an eye on that. Now that would have been one probably would have been better served to have done a spread on that to insulate that draw that we're experiencing. But we'll see it. We'll stay with it. So it's getting to be about 1:15, and we've been on for about an hour. I don't expect to do about 45 minutes to an hour. You're welcome to follow us on Twitter for free. You can follow us on YouTube. Be sure to push the like and the notification buttons. I'm not sure when we're going to be back again, but when we do, we'll try to announce it in advance, and we'll probably fall back into our futures trading and give you a chance to ask some questions on that. And we'll try to do something a little bit different. We'll try to do something a little bit different each time. Um, I'll wait. I'll give this a few minutes. If you have any questions at all about anything trading or us, whatever it might be, just use the chat function, and I'll wait. Otherwise, we want to wish everyone the very best today in this week, and don't hesitate to reach out. And also, too, for those that are passing through on YouTube, if you want to know the outcome of these specific trades, we'll try to report in on them next time we go live. But if you say, hey, I want to know, um, just send me an email, and we'll send you, when we execute the exits on these one way or the other. It could be days, right? We'll report back. Maybe that'd be happy to do that. I'll just take a moment too, in case, folks aren't familiar with this. When you buy a stock, just give you, I'm going to graph this out here a little bit. I'll just do it right here. When you buy a stock like so, you obviously want it to go to the moon, right? So you buy it here. What you can do is when at the time you buy, if you buy 100 shares, let's see if I can write this out a little bit here. So if you buy yourself 100 shares, you got to do it in lots of 100. Then what you can do is you can go upstream and say, I'll buy the 100 shares at this price, but I am prepared to let it go. Actually, I wanted that to be red. If I can do this here. I'd be prepared to let it go right here. So maybe 100 shares, I buy it at this price. And then what I do is I go into the options market and I sell a call a little bit higher, which is in essence a short trade. And that will prevent me from profiting if I go higher. But all I'm trying to do is make the money from here to here. And I get to keep the dude's premium that he paid me, the call. And that's in essence what you're doing in a very simplistic way. They take time to play out, but it's a great way to go. And it's a great way to learn, because in the event that you buy a stock here and it falls back, if you sold the call up here, the call is going to go down in value, meaning it's going to accrue more and more to you. And you could buy the call to close, thereby lowering your cost basis. So by buying the stock, you want to buy the stock at a good place, hopefully on a pullback or at a good place, and hopefully the Pebble Beach is going to give you that opportunity. And then if you turn around and sell the call, it acts as an insurance, and you can do very, very well with that approach. And it isn't it's not real act. It isn't active. It's more I don't know. It's active, but not intraday active, right? And you really do put time on your side in terms of letting time decay. So it can be a really nice way to go if you have another gig and you don't want to be watching and trading really fast, or trading intraday. And it teaches patience. So it's what we call covered call writing. But you want to get them. So for instance, like up here with Hologix, we just bought the shares, right, on Hologix. So it's still there. And the shares have pulled back $75. But had I sold a call against it, the call would have, when I sold it, I would have paid a premium, and the call would have gone down. And so it would have insulated this drawdown a little bit, right? So I hope that makes sense. We go into great detail anyways. We spend much of our time during our Q school with futures and futures trading because they're so liquid and active. But we will take time, to the extent that you're interested in, and go through, and especially early on in the Q school, and get some trades on so that you can see them roll out and play out. And you can do covered call. There's not a lot. There's some things the government restricts you from doing in your IRA accounts, but they do allow you to do covered call writing in your IRA accounts, and it can be a really neat way to go. It's kind of like getting, I like to think of it as getting dividends on steroids, And so it really is, you get comfortable, get the stocks in here that you want to be trading, and get comfortable with it and how it's presenting. And we show you, and get comfortable with your mechanics. And then you've got something mechanical, objective, and consistent. So you don't need to be listening to any opinion, including my own, right? I try not to give out an opinion on the markets to our members, because they have these tools and they don't, we're trying to make decisions objectively, consistently, mechanically, and they just don't want to deal with that. Make sense? And they just updated us on the CME, and we're 138 out of 2,200. I think it's 2,200. So we're okay. We're in the catbird seat. We don't have to. And this challenge is just on, we can only trade gold futures, silver futures, platinum, and palladium. Palladium. Mhm. We'll bring into view the futures, and this is Swing Machine, right? And this is a daily view, half day, and here's the hourly view. So the ES futures contract went long 49 hours ago. Isn't this is crazy? Check this out. 49 hours ago at noon. This was last Thursday. And you'd be up 3,600 if you used a futures contract. If you used an option contract, still could have done pretty well. But check out on the hour the NQ. 49 hours ago, 4,500 back on June 1. The Russell, 49 hours ago. That's bullshit. It is bullshit. And the YM in 60-minute, 49 hours ago. What happened at noon on June 1st? I don't know. But I will tell you that somebody's machines with a whole lot of liquidity started buying the hell out of the market. And the VIX warned our members 70 hours ago that they're probably going to do just that. Now they're dipping, is getting a little bit long in the tooth, but it's a rigged game. I'll be the first one to say that. It's just that we want to stay on the right side of the rigging, and these tools, We won't get every single trade right. Nobody will. No tool is going to do that. But we want to just stay on the right side and hopefully structure our trades so that we, kind of hedge our bets. So with that, it's now 1:30. We've been live for about an hour and a half. We've got to get back to our business of trading and trading futures primarily. We're going to keep these positions on. If you want to know the outcome, let us know and send us an email, and we will make it a point to give you the outcome the next time we come in. We'll hopefully do it. It's pretty, the market is just not, it is what it is. And that's the beautiful thing too about staying mechanical. We're not forcing anything. We're not, out here searching for something that isn't there. If it gets populated, it'll get presented to us. Good luck, everybody. And thank you. I hope it was fun.